South Africa, one of the world's fastest growing and most diverse emerging markets. With world-class infrastructure, sophisticated financial services and a progressive constitution, it's a gateway to African markets and the ideal investment destination for global investors. For over 135 years, the Johannesburg Stock Exchange has been a pillar of the South African economy, delivering an uninterrupted trading, clearing and settlement environment. Through our multifaceted business model, the JSE trades multiple asset classes and offers core issuer and investor services from listings to benchmarks and settlement. Operating in such a diverse economy gives JSE clients access to a broad range of issuers across industries through multiple asset classes. We support the ecosystem with innovations like virtual AGMs, industry training, and Share Hub. We also offer secure, efficient secondary capital markets across a diverse range of securities. Through the JSE co-location facilities, clients can host their infrastructure at the JSE and access high-speed, low-latency trading and market data. Clients can access live JSE market data through our London-based international access point, which facilitates connection from almost anywhere in the world. Our direct market access process allows clients to participate quickly and easily in the auction periods and continuous trading periods. The JSE's integrated trading and clearing capabilities deliver real-time clearing, allowing members to use cross-market trading strategies on a stable, functionally rich platform. And our world-class infrastructure technology systems safeguard operational resilience, especially in uncertain times. The JSE also offers a complex order suite that provides a secure, non-visible and regulated channel through which to execute big orders. This enables competitive trading strategies and improves the efficiency of filing large orders while minimizing impact. A variety of market data products is available to market professionals and data distributors, which includes live, non-live, end-of-day, and historical data. We have nearly 170 indices across a variety of methodologies and investment criteria. Our joint venture with FTSE Russell includes a range of world-class indices. Other available datasets include bond ETP data, tick data for most markets via the JSE Tick Data solution hosted by the CME Group, corporate actions, business intelligence reports, valuations data, and live data provision via our IAP. JSE Clear is the settlement authority for exchange-traded equities and the clearinghouse for the exchange-traded derivatives market. It clears and risk manages transactions in securities listed on the JSE. We have created an environment that enhances sustainability and disclosure, maintains the highest governance standards, and offers innovative products that allow investors and issuers to act on their sustainability needs. As a leading global exchange, we co-create, unlock value, and make real connections happen. JSE, let's connect.
Ladies and gentlemen, good morning and welcome to the first edition of the JSE Investment Forum 2024. My name is Maurice Madiba and it is my pleasure to join you today. I'm the head of primary markets at the JSE, looking after various asset classes. Today is one of those joyous occasions where we get to shine the light on some of the listed companies at the stock exchange. We play a crucial role for the actors, stakeholders, and investors in South Africa's capital markets, and we are committed to showing our continued support for the market by being the venue where companies can raise capital, increase their shareholders, and truly realize value on their path of growth and prosperity. We live in a dynamic and complex economy, full of opportunities and prospects, and this investment forum is designed to make it easier for you, the viewer, to understand the workings of companies presenting here today. The investment forum is a platform for investors and listed companies to engage, and so we encourage you to share lots of questions with the esteemed executives joining us today. This investment forum is one of several initiatives that we have on our agenda as primary markets at the JSE, as we believe it creates a great touch point for the public who may wish to know what listed companies do, what is on their growth horizons, the operations of a business, and to better inform their investment decisions, and also to hear directly from the captains of industry while having a chance to ask some questions. With this kind of visibility, we believe it will drive engagement and awareness, and in turn, we hope that it will attract more investments and trading activity on our stock exchange from investors who, after this show, may gain an appreciation for what is on offer at the JSE. Of course, investing does not come without risks, and neither does return. So it's important for me to emphasize that the contents of this show are not intended to be financial advice or recommendations. And with that said, I would like to extend a wonderful thank you to the team who have put together a stellar cabinet of companies from our listed issuers. I hope the companies at the forum today will leave you entertained, well-informed, and excited to take a closer look at them in the near future. Before we kick off today's proceedings, I would like to take a moment as well to extend a word of thanks to the executives of the companies that are joining us this morning. Firstly, we have Anthony Leeming, CEO of Sun International. We have Chris Ryan and Willem Klopper, the Chief Financial Officer and Chief Strategy Officer of We Buy Cars, respectively. Kobus Loubser, the CEO of Curro Holdings, and Carl Nolte, the Chief Marketing Officer of Purple Group. Thank you for making the time to be with us today and to showcase your respective companies. And a big thank you to everybody who's tuned in. We hope you immerse yourselves in today's discussions and questions and take note of the proceedings. And when they conclude, act, trade, and invest. I hope you have a wonderful time. Enjoy.
Welcome. Great to have you on the show today. Thank you very much for joining us. So we've had a very good overview in terms of what we are to expect for the show. What are your expectations? Any particular presentations that you are looking forward to, perhaps?
Yeah, thanks, Patricia, and good morning. So obviously for me, I think a lot of us, when we engage with the investors and the investor community, tends to from very limited engagements, whether it's through, an IPO or a prospectus. And I think obviously what the opportunity that we get here is to actually engage with the decision makers and sort of get an ongoing understanding of how they are planning their business, how they're executing. So I'm quite excited about that. And of course, I've got a particular passion for the academic space. So I think the Curro Business Update is one that I'm particularly excited about.
Fantastic. Well, we're looking forward to the conversations. I really hope we get some good information out of the executives. So I'm sure you've got a couple of difficult questions that you maybe prepared for some of the execs.
I think they're interesting questions. I don't know if I want them to be difficult, but I do think that obviously this does provide us with the platform to sort of ask the type of questions that perhaps some of us would not have the opportunity to do. Correct. So. And I think obviously the importance of this platform is that it's not just us that can come up with the questions. You as viewers can also tap in and give us some of the questions that you'd like us to pose to them. And I suspect that given the time constraints, some of the questions that will emerge, we'll probably have to send them through the different executives and say, well, please provide a response to this. So please do feel free to share some of your insights and some of the questions that you might have. And we definitely want to get as much out of these executives as possible.
Fantastic. Well, we're looking forward to it. So as always, we have a great lineup of speakers for you today. The combined market cap of the companies presenting is 25 billion rand, and they really do span across a number of sectors, that being consumer discretion, general retailers, travel and leisure, and investment services. And again, just to echo what Kaya was saying, please make sure that you get your questions in online. Please don't wait for the end of the presentation, because once the speaker is gone, we cannot ask the questions of the executives. But we've also decided to ask each presenter the same question, and we're going to be asking a quick elevator pitch saying, your business or our business is a good investment because.
Yeah, and I think it'll be very interesting to see how many of them can compress that very important high impact message into a 30-second elevator pitch that says that this is why we are an investment case.
Well, we will put you in charge of that. I'm looking forward to it. Right, so for our first presenter for today, we've got Anthony Lehman, who is the Chief Executive Officer of Sun International. Sun International listed in 1967 in the travel and leisure sector. The company today has a market cap of approximately 10 billion rand. The company has also raised 3.3 billion rand since listing on the exchange. Sun International owns and operates casino, hotel, resort properties in South Africa and Nigeria. The company also provides management services for businesses in the hotel, resort, casino, and gambling industry. In their recent annual financial results, the company announced that the group income was up 7% to 12.1 billion rand and group adjusted EBITDA up 2.4% to 3.4 billion rand. Last year also, the group announced the Piermont deal, which should be concluded sometime this year subject to regulatory approval. We've got Anthony in studio with us to unpack some of these numbers, but before we get him on stage, let's view the corporate video. Welcome, Anthony. Great to have you in studio. Of course, some great numbers coming out of the group. Why don't you take us through some of those numbers in your presentation today?
Perfect. Good morning. Thank you. Thanks to your viewers. I think when we look at Sun International, we really four businesses, chief business, the urban casinos. Urban casinos is the bulk of the business. They are where casinos are close to major metropolitan areas. We really had a good year. It's a tough economic environment, so not the best. When we look at Sun Slots, really impacted by the economy, revenue marginally down, and moving on to hotels and resorts. Hotels and resorts had a fantastic time, benefiting from a boom in local tourism as well as conference business. Internationals are starting to come back, and really we've seen at the Table Bay a fantastic uptick. I'll take you through numbers more in detail shortly. Sunbet, really the growth and the outstanding performance that we had. A revenue well up, over 100% up, and a new exciting business for Sun International. Just when you look at the makeup of our revenue, you can see there from the slide, urban casinos really the bulk of the business, followed by hotels and resorts, and then our Sun Slots business. But the really exciting part, Sunbet, having grown significantly. EBITDA from Sunbet went up from 1% in 2022 to over 6%, and we expect this to continue to grow. Overall margins really looking quite strong, over 28% and higher than they were in 2019, despite a very difficult 4 or 5 year period. Just moving on, look at primarily the urban casinos. Revenue at 6.7 billion, really in line with the prior year, primarily due to the weak economic environment and difficult trade environment. EBITDA still strong, 2.44 billion, and a really exceptional margin at 35%. Slightly down in the prior year, but impacted by diesel costs and clearly running generators with 24/7 business and having to operate all the time, burning a lot of diesel. CapEx at 497 million at 7% of revenue. When we look at our Sun Slots business, it really has been impacted by the economy as well as load shedding. These are outlets, small limited power machines in pubs and clubs. And unfortunately, when the electricity goes down, a lot of these properties don't have alternative power sources and have to close. So limited trading time impacted, and as a result, revenue slightly down to 2.7%, but nevertheless generating 350 million EBITDA, so really a good performance. An EBITDA margin of 24% and with 87 million capex. We have over 5,000 LPMs in the business, spread in the major provinces, 2 routes in Gauteng, 2 in KZN, and 1 in Western Cape, and then in Mpumalanga as well. When we look at the resorts and hotels, I think the standout performance here really was Sun City. You know, Sun City we're best known for, one of our fabulous assets. It really has turned the corner, generating EBITDA of 350 million and having an outstanding year. Occupancy is well up, benefiting from the local tourism as well as a conference business. International business still a bit slow to Sun City, but coming back quite fast. Occupancy of about 67% and still some great upside. This is probably Sun City's best year ever. Table Bay Hotel, international tourism to Cape Town has really been outstanding and really had exceptional year again as well. So in total, revenue of 3 billion in hotels and resorts division, 705 million EBITDA, 27% up on the prior year. So really one of our outstanding divisions. As I mentioned earlier, I think Sunbet, one of our really fast-growing business, income up 116% to 733 million, an EBITDA margin of 30.2% and 221 million in total EBITDA. This is 426% up in 2022, and we are continuing to see strong growth in this in Sunbet. The key is driven by the slot business. You'll see slots, live games. Live games are basically baccarat, blackjack, and normal casino-style games. Sports betting pretty much flat with the focus moving to casino. But in total, really a great year. We have revised our forecast. We are looking to try and achieve by 2028 900 million EBITDA and 3 billion gaming revenue. Just when you look at Sunshine, the investment case, why? It was a question you're going to ask me, so I'll see if I can do it in what I was given, 30 seconds. We have a fantastic business, sustainable growth. We've continued to grow. Coming out of COVID, the business obviously took a lot of pressure. We had to close all of our operations, but we've shown the resilience. Casino income up, LPMs doing well, and then a really strong growing resorts hotel business as well as Sunbet. Profitability has increased significantly, best year ever last year, and continue to show growth. We're scaling the group. We'll talk about the Pyramid acquisition. So recently we announced the Pyramid acquisition, a 7.3 billion acquisition, which will position the group well to grow and really in the major urban casinos. And that growth will continue will delever very quickly and ultimately scale the group very quickly. Strong cash generation. We've seen the margins, casino margin at 35%, overall group margin at 28%, fast-growing resorts and hotel margin, as well as our Sunbet business producing 30% EBITDA. Capex reinvestment around about 6 to 7% of revenue, and we've been able to maintain that. So great cash generation, over 66% cash generation after Capex from EBITDA. Great business. Shareholder returns, we paid 75% of adjusted earnings as dividends and continue to de-gear while doing so. So we'll look at share buybacks and ultimately a great investment case. Just when we look at the outlook, the urban casinos, we can expect to still be under a bit of pressure economically, but we are expecting growth and them to continue to grow. We look to maintain our market share in all key provinces and even grow it. Our Sun Slots business is still impacted by load shedding, but obviously a little bit less lately. More rollout this year where we expect more approvals from gaming boards and expected to continue with growth as well. Our resorts and hotels will continue the outstanding performance from last year, probably not at the same percentage, but ultimately will still grow. Again, as mentioned, Sunbet, we are expecting still exceptionally strong growth from that business, which we're experiencing currently, and still to do very, very well. Just when you look at the proposed Pyramid acquisition, I think it's a very large acquisition, 7.3 billion. Looking to scale up the business, really focused on our large urban casinos, complemented by our hotels and resorts. Online strategy, I think the new customer base really will help us leverage and move forward in our online strategy. De-gearing, we expect Piermont, while we're taking on 7.3 billion debt, to de-gear within 2 to 3 years to be below 2 times debt to EBITDA again. Returns to shareholders, will continue to pay dividends. Anticipate this stage, once the acquisition is done, at 50% of adjusted earnings until we de-gear to below 2 times. I think the transactional timing is still fairly uncertain, but we do expect it probably to be another year with regulatory approvals taking quite some time. At the moment, the Gaming Board and competition authorities and a lot of questions. Just when you look at where we've come from, Sun International, when you go back to 2017, we were a highly geared business, trading at over 3.6, inefficient operation, margins were not great, and we've moved that quite significantly to where we are today, where the business has a strong balance sheet, debt to EBITDA below 1.6, which has well positioned the group with the Peermont acquisition. We've got fast-growing sectors in hotels and resorts, as well as our online business. And where we are now, we have an omni-channel business that focuses on primarily gaming-driven, but with complements of hotels and resorts and our online business as well.
Thank you very much for that, Anthony. So I've got a question, if I can go. The Peermont deal, 2015, apparently it was on the table. I believe it was voted down at that particular point in time. What's different today?
Well, I think at the time of doing it, we hadn't opened Times Square yet. And the competition authorities basically said, well, if you want to do this deal, you must dispose of Emperors. Now, Emperors is the crown jewel in the Peermont stable. So without Emperors, the deal wouldn't go ahead. Why this year we see it differently? We've had RBB do quite a detailed economic assessment, looking at the market shares, looking at the overlap between and competition areas, and they don't believe there's significant overlap between Emperors and between Times Square as well as Carnival City. So we do think competition concerns should be a lot less this time around, and we're using actual factual data.
Okay, fantastic.
Yeah. And I mean, the regulatory approvals process probably sort of becomes a great frustration for everyone trying to put a deal together. Does there come a point in time where you say, come on, regulatory authorities, we need to get this across the line because we're wasting resources and shareholder and stakeholder time in getting this thing across the line?
Yeah, look, it's a significant risk. I mean, we start negotiating this deal in March last year. We only expect it to be concluded by the end of this year. So 2 years for business to focus on acquisition is a long, long time. We do believe the competition authorities are getting a lot quicker, a lot better. They've been very engaged so far, as well as the gaming boards. So we do expect the process to probably be a little quicker this year than it has been in prior years. So we're quite confident we will push them along, and I think we've got a very compelling package. Public interest as well. There'll be no retrenchments. Yeah. And ultimately, I think it's a very compelling South African story. We international investors selling out, we buying locally, and keeping the business local.
Yeah. Anthony, one of your slides shows sort of the 7-year turnaround and the 7-year journey that you guys have been through since 2017 in particular. And obviously that sort of intersects with the great COVID pandemic, where a lot of businesses in your sector quite simply didn't know whether they're going to survive. So I'm interested in how you managed not only to sort of have the bigger turnaround plan that you started initiating in 2017, but also survive what was really the great reset and the great acute pinch for businesses in your sector. I mean, some of the more established hotels that we know about still haven't reopened since then, so it's still quite a big issue out there.
Yeah, look, it was a significant challenge for everyone in the sector. So, first of all, I think we weren't sure we were going to survive. Fortunately, we had quite a good and invested shareholder base. We went for a rights issue right up front. So within 3 months of COVID, 3-4 months of COVID, we had raised 1.3 billion. I think that was critical to give some security to the business. But ultimately, I think during that COVID period, we restructured the business entirely. We closed some loss-making operations, and we came through a lot stronger. The business, the margins are a lot better than they were before. You saw the slide, just over 28% in 2019, and now slightly higher, 28.2%. So despite very little revenue growth, we managed to reposition the business and to continue growth. We pushed our online business really hard. So when we looked at where gaming was moving to, we focused on the online business, and it's been an incredible success, and we're hoping a lot more there. Hotels and resorts margins never been better. Sun City has a record year. So all that work, all that effort during COVID has paid off in the prior year.
Yeah. Patricia, I know you and I like going to hotels, but my reason I want to go to hotels is because I'm escaping load shedding at home. And I imagine for you, Anthony, the question of what load shedding does in relation to your businesses and everybody else's business out there has been something that everybody's had to navigate and live through. We're obviously going through 21 days of no load shedding, so perhaps this is the wrong time. But I imagine that for everyone that sort of has to run a business where a lot of people have got an expectation that there will be electricity when I get there, unlike my office where they can legitimately say, well, there's no lights after 5 p.m. I expect to find, that the power is there in the hotels. What type of investment does that then require from you guys that run the type of businesses where people have got that expectation that this is the place where things will be, even when Eskom has decided I shouldn't be at home?
As I said earlier, we're 24/7 business, so we're open at all times. So we've always had backup power in generators. It's just the amount they're being used currently. And clearly, the more generators get used, the more likely you have failures. So significant investment, repairs and maintenance has been required. And ultimately, we are moving towards a bit more green energy. But green energy, in the night doesn't help. Solar doesn't really work during the night, so you still have to burn your generators. So ultimately, I think we already had the investment, but currently last year it cost us about 120 million in diesel costs across the group. This year we're hoping a lot less. So really it's been primarily a cost. Our customers have been satisfied, but yeah, the risks of increasing breakdowns, increasing services and maintenance is where we've had to focus to make sure we stay open.
So part of that capex spend that you're doing of 200 odd million, I'm assuming that would be part of it, right, to cover the conversions to the solar?
Yeah, well, at the moment we're busy with we did a project in Sun City last year, a fairly small one, only 14 million, but proven exceptionally good returns and really working well. We're busy with a project at Carnival City as well as Sibaya, about 40 and about 80 million in total, and we plan to do some further investments. But the good thing about it, investment in solar is profitable. It's generating in excess of 20% IRRs. So from a shareholder perspective, I think it's a great investment.
Yeah. I mean, historically, your assets like Sun City have obviously had quite a good international profile. So that meant that when we had a good international pipeline of visitors and conferences coming here, your businesses would have seen the upside of that. And I think since the pandemic, not only people have learned how to communicate online, but perhaps we haven't really seen the inflow of tourism and conferencing at the same scale that we had before 2019. Do you as a business expect us to get back to those levels, or are you simply saying that perhaps we should pivot into capitalizing on the local market where people really say, well, I'm not going to go to Mauritius now, am I?
Yeah. Look, ironically, I think our local leisure bounced back very quickly. So the local leisure market was fantastic and really helped the business get back into busier periods. But the conference business was exceptional. I think the more we do these team calls, the more we're not face to face, the more people want to get together. And we've experienced that. So we've actually bounced and we're above 2019 conference levels. The big gap at the moment is really international, but mainly into Sun City. In the Table Bay, it's occupancies are strong, room rates are strong. And if you go around Cape Town right now, walk around any five-star hotel, walk around the waterfront, all you're hearing is foreigners. So the bounce back international tourism has been primarily Western Cape based, but we are seeing the game farms, we are seeing some increased in Sun City. We still have challenges with visas for Chinese travellers in particular. Yes, that sector is about the only one where we're still behind at a place like Sun City.
Yeah, so quite interesting that the Minister of Home Affairs is about to do a presentation about the visa regime in South Africa. So hopefully there's going to be an upside for that. Patricia, I don't know if you have any other questions?
Yeah, I think just the last question from our side. Post Piermont's acquisition, hopefully it's done, everything is approved. What's kind of the next growth node for you as a business?
Look, I think the key is focusing on online. We got Piermont acquisition, which is going to take 2 to 3 years to bed down. That will be the primary focus and growing our online business and our presence. So we are looking at opportunities in Africa, but still we see South Africa. We're only about 4% of the market. And with our brand, we believe we should be at least at 10 and growing. So our target is to get to 10% there. So huge focus in the online business, continued focus on hotels and resorts, which is showing growth, and really maintaining our urban casinos market share and trying to grow it as well. But clearly online is where things have moved and the market is growing substantially.
Fantastic.
Speaking of online, we've got an entire audience waiting to hear your 30-second pitch. Why should our potential investors
You'll have to do it again.
I'll do it again. Well, I think Sun International is really a business of 4 components that work really well together. We have our urban casinos, our hotels and resorts, and our online business and LPMs. Working together, these businesses really generate exceptionally good cash flow, high margins, higher than the majority of companies. Reinvestment in capex is not that significant. As a result, returns to shareholders fantastic. 75% of adjusted headline earnings paid as dividends, which we've been doing for almost 2 years now, and we will continue, even with the Piermont acquisition, paying out significant dividends. So we believe it's a great company, great business, something that people need, and certainly we're looking excited about the future.
Fantastic. We do have an online question which really speaks to about the lessons learned from COVID-19 and load shedding, but I think you did kind of address it in terms of your resilience. I don't know if there's anything else that you'd want to add.
Yeah, I think lessons learned is people. If you don't look after your people during COVID, it ends up hurting the business in the future. So one of our focuses during COVID was really people. So our people were probably the most important aspect, communicating them. No one knew what was going on, but you were honest and open, and it certainly helped us get through. And a lot of people have thanked us that we were transparent, despite cutting people's salaries by 60%. People were actually relieved that we came out stronger and we came out better.
Well, there you go. Any other questions?
No, Anthony, thank you very much. I mean, obviously, if we had an hour, do a deeper dive into all aspects of the business. But I think we've given our investor community and also our viewers some insights into the business that we probably wouldn't have had before. So I do think that we've left them much better informed than they were.
Very well said. Thank you very much, Anthony.
Thank you.
Thank you for joining us today. Right, next up we have We Buy Cars, which listed on the JSE last week in the consumer discretion sector, ending off the day with a market cap of approximately 8.4 billion rand. The company was established in 2001. We Buy Cars provides an alternative to selling or buying pre-owned vehicles. The company today has about 2,800 employees across South Africa, buys and sells vehicles from 15 supermarkets, and has 47 buying pods with over 340 buyers nationwide. The company performance over the past 2 decades has continually surpassed expectation as the company has driven innovation through the use of internally collected data, IT, and expanded its physical footprint. Today we have both Chris Ryan, Chief Executive Officer of We Buy Cars, together with Willem Klopper, who is the Chief Strategy Officer. But before we cross over to them, let's have a brief overview of We Buy Cars.
Back the We Buy Cars team, and obviously you've become regular visitors here, having listed as recently as last week. Please take us through your presentation.
Thank you, Kaya. Thank you for the opportunity. Since we've only been recently listed, I'm going to give a bit of background about We Buy Cars, as many people don't know the company that well. Let me just get the presentation going.
Yeah.
Like Patricia mentioned, the company was started in 2001 by brothers Dirk and Faan van der Walt, and over the next 2.5 decades it's really grown to a household name in the South African used vehicle context. Since inception, what has been key to Dirk and Faan has been that they keep the cash and profits generated in the business to fund organic growth, and that philosophy has held true over the last 2.5 decades, and Chris will allude to our low gearing levels that reflect that philosophy. How we look today, we've got just shy of 3,000 employees across the country. We operate from 15 supermarkets, and we have 74 buying pods that support our 350 buyers nationwide to get even more convenience to our customers and have the opportunity to sell their vehicles to us at more convenient locations that are typically located in retail shopping centres, parking lots. From a marketing position, and just to understand how we operate, there's roughly 11 million registered vehicles on the South African roads. About 600,000 new vehicles get sold every year, and then there's also a natural churn of vehicles that drop out of this car park that are written off or no longer fit for purpose. We Buy Cars operates across the whole spectrum and buys all cars of all ages, no matter its condition or age, which is also a differentiator to our perceived peers. Our data shows that our vehicles, or South Africans typically change ownership of a vehicle about 5 times in its life cycle, and We Buy Cars has the opportunity to engage with the customer at each of these transaction points. At this point, we evaluate vehicles, price vehicles, and also capture the data that informs our buying and selling decisions as we go forward. From a peers perspective, we think it's more appropriate to look offshore. There are many competitors that operate in the South African landscape, but not many at the scale of We Buy Cars. So it's probably more appropriate to look at the models of a CarMax or a Manheim in the US. And with We Buy Any Car, those 3 models collectively replicate what We Buy Cars tries and does from its operational side. Our other key differentiator, we believe, is the way we operate and use data in our business to inform our decisions, and also the automation that we've brought into our business. In 2018, WeBuyCars' digital transformation really started under the leadership of Wynand Bekes and his team that made the bold decision to develop tailor-made and specific software to meet the needs of the operations and the goings of WeBuyCars. This decision has really generated many benefits, and we see that today, that we can really trust our data, the integrity and accuracy of it, and we're in full control of our software. This means we can continuously tinker and change and adjust our software as our business needs change, and it also allows for us to have continuous experimentations to enhance the user experience and also make ever better buying and selling decisions. It's also important to just distinguish our various sales channels for people not familiar with our business. We've got 3 distinct channels. The one channel is B2B, or to dealers. WeBuyCars loves assisting dealers across the country in stocking their showroom floors. The other 2 channels are to private individuals, either cash or secondly the private finance channel, where we've got the opportunity to earn secondary income from financing institutions where we've assist clients to arrange finance, and we also have the opportunity to sell ancillary products to these clients. From a growth perspective, we obviously want to enhance our market share, but we want to do it by doing more of what we've done and not to deviate from our core focus. We obviously have identified further physical locations we would like to expand. We want to increase the amount of supermarkets we have over the next year or 2 and bring the WeBuyCars offering to more South Africans and closer to their doorstep.
Thank you, Willem. Good day, Kaya, to you and the team at the JSE, and thank you for having us here today. It's really wonderful to be here.
Thank you.
So Willem spoke about a company that's 23 years old. I've been with the company on a 7-year journey. It's been a very interesting journey, and it's been very exciting to be part of a real South African growth story. In 2017, we had 1.5 motor vehicle supermarkets, and as we heard a bit earlier, we now have 15 supermarkets. We had no vehicle buying pods in 2017, and in 2023, we have 74 vehicle buying pods. In 2017, we sold 16,435 motor vehicles, and in our most recent financial year to 30 September 2023, we sold 141,851 motor vehicles. So from roughly 2,000 motor vehicles a month to an all-time record sales for WeBuyCars of just over 14,000 motor vehicles in January 2024. Our profit after tax in 2017 was 86 million, and in 2023 was 660. In 2022, we recorded record profit levels at 762 million, as you can see on the slide. I'll come back and tell you more about that later. Some of the highlights that I've experienced have been helping the team build a large property portfolio. So WeBuyCars owns 9 of the 15 supermarkets. You will all be aware of our largest supermarket is at the Dome in Randburg, and we also have a 50% undivided share in the Midstream warehouse, which is probably our second largest supermarket. So we have a R1 billion property portfolio at historic costs, and against that we have 730 million rand funding line in place with Rand Merchant Bank. We've recently refinanced the funding on the property portfolio at a lower interest rate. It's also been a lot of fun, as Willem spoke to earlier, building a robust F&I business that we have been able to scale effectively. The headcount also grew from 329 in 2017 to 2,800 in September 2023. In December 2023, WeBuyCars was rated for BBBEE purposes for the first time, and we achieved a level 6 BEE rating. You'll see, so if you can just go one back, Willem. You'll see on the slide that WeBuyCars has experienced a 60% compound average growth in profit after tax from F 2011 to financial 23. I do need to explain the anomaly in F22. So if we go back to F22, we opened 6 branches. It was the year after COVID where there were chip shortages and there was very low new vehicle supply levels. At the same time in F22, we had globally and in South Africa, used vehicle prices went up 30%, and we enjoyed the benefit of that in F2023, 22. In financial 22, the market became a little more challenging, and some of these favorable factors reversed. So in financial 23, whilst our volume was up 12.6%, our profit after tax was down 13.4%. On the slide on the screen at the moment, you can see that, however, our EBITDA only went down 3.1%, so from 1.184 billion to 1.147 billion. WeBuyCars is a highly cash generative business, and you'll see on the slide in financial 23 a strong cash flow generation from operations, and this has continued into financial 2024, and I'll speak just now about the transaction capital voluntary trading update. In financial, if you can just stay back there, Willem. In financial 21, we opened two supermarkets. So we opened the Springfield Park warehouse in Durban in October 2020, and we opened the Germiston branch in June 2021. In financial 22, we opened 5 new supermarkets. The first one was the Dome in December 2021. On Valentine's Day in 2022, we opened a supermarket in Polokwane. On the Easter weekend following that, we opened in Nelspruit, and shortly thereafter, we opened in Riverhorse Valley in Durban and in Epping in the Western Cape. So the opening of these branches requires working capital, and just to give you an example, at the Dome, your investment in inventory is roughly 250 million rand. So that accounts for some of the drag on the working capital in F21 and F22, as you see on the screen. So a company's debt levels and high debt levels are always of concern to investors. WeBuyCars is very conservatively geared, has a debt to equity ratio of 52.7% at 30 September 2023, but the majority of that debt is against the property portfolio. So as mentioned earlier, we have 730 million rand against a property portfolio at historic cost of 1 billion. And then the remaining debt in the business is roughly 421 million of revolving credit facilities against a 2.135 billion investment in inventory. WeBuyCars has 635 million rand of available facilities, and has ample headroom on covenants, and this positions the business well for future growth. As I mentioned earlier, Transaction Capital issued a voluntary trading update on the 18th of March 2024, dealing with the WeBuyCars trading for the 5 months to the end of February 2024. The salient features include units sold up 13% at 66,276 motor cars, including the January all-time record of 14,006 motor cars sold. Revenue up 16% at 9.49 billion. Core earnings up 25% for the 5 months to the end of February at 333 million. And also pleasing to note, lower debt levels and cash generated from operating activities of 305 million for the 5 months to the end of January. WeBuyCars has a robust balance sheet, which has been conservatively constructed. It has low gearing and is well positioned for future growth. On the final slide, you will see our growth ambitions, which is to double market share from roughly somewhere between 10 and 12% of the used vehicle market to 23% of the market in financial 28, which is 4 years from now.
All right. No, thank you very much, Chris, and thank you to Willem. So there are obviously a couple of questions, but I think obviously a lot of people that probably weren't following the pre-listing story and all the information around that would just want to sort of just like a brief overview of, well, what was the relationship between you and Transaction Capital before last week, what is it now, and what is the big plan regarding those interactions?
I'm happy to handle that one, Willem. So we became part of the Transaction Capital stable about 4 years ago. When we first started speaking to the senior executives at Transaction Capital, it was probably the first week that we were back in the office after COVID.
Yeah.
And we had robust discussions with Transaction Capital. At that time, we were selling about just shy of 7,000 motor vehicles a month. And as you've heard, we've doubled that to 14,000. Going forward, Transaction Capital have unbundled all of the shares that it owns in We Buy Cars to its existing shareholders. So we're no longer owned post the 11th of April, which was the listing on the JSE, and post the actual sort of unbundling workings taking place, which all happened yesterday on the 16th of April. If you were a Transaction Capital shareholder, you still own your Transaction Capital shares, but you now have We Buy Cars shares as well. And that unbundling ratio was a ratio of, for every one Transaction Capital share, 0.32678 We Buy Cars shares.
Yeah, so I imagine an investor who wanted specific exposure to your business now obviously has the opportunity to now say, I'm interested in that part of the business rather than trying to, unpack the entire Transaction Capital business model.
I think that's probably a very good summary.
Yeah. So I think one of the big interesting questions obviously is, just the role that aggregators like yourself can play in sort of, running this ecosystem. I think when somebody says that I want to look for a car, you're much better going to a supermarket where there's variety and there's diversity instead of going to individual dealerships. Do you see this as one of your unique distinguishing features as We Buy Cars?
Yes, I think so. Thanks, Guy. Not only do we have about 10,000 vehicles for sale at the website at any given time, we see that many customers do start their process with us online. We've got about 6 million monthly viewers or visitors on our mobile application and on our website, which make up about 2 million unique visitors. So I think our scale, our diversity, the fact that no vehicle looks the same, if someone else buys it, you miss that opportunity. And I think that urgency also creates a bit of fun, I guess, for the consumer. But the scale and diversity and the size of it gives the opportunity to really start your browsing experience.
Yeah, and I think obviously, historically people used to have some very, very harsh sentiments about used cars, but I think the idea that you've got this particular organization or the structure that actually ensures that by the time I say, look, I'm interested in this, I can sort of rely on your ability to vet it and to be able to assess the quality of that vehicle, which is something that a lot of people probably think is important, particularly in the pre-used car space.
No, absolutely. And I think we've put a lot of effort into bringing trust back into the pre-owned motor vehicle industry. And every vehicle that we market and sell comes with a DECRA report. So it's basically the old 101 point checklist. So we'd like to be open and transparent and to say that this 1 or 2 year old motor vehicle has absolutely no problems on it.
Yeah.
But this 9, 10, 11 year motor vehicle is in running condition, but it has these 3 or 4 or 5 different roadworthy relevant issues.
Yeah.
And I think that definitely has brought a lot more trust back into the industry.
I think that's quite important. We also have a couple of questions that we received from our viewers who are watching from different places in South Africa. So I'll just pose both of them to you now. So the first one is obviously, data is an important part of your business model. How do you plan to monetize the data, and how do you currently use the data in your current operations? I think there was a slide that's spoken to a bit of that. And then the secondary question is, I would like to know if they will tap into the selling of business vehicles like big trucks, buses, and those types of resources that are used in the mining industry, trucks and tippers and all of those types of businesses. Is this something that you guys are looking into doing as part of your expansion?
I'll maybe ask sort of answer the first question. So from a data point of view, we sort of look at all the touch points and our buyers out in the field and at our pods and our warehouses. We actually see them as data capturers. We want to make sure that evaluation is done accurately and precise as possible to inform our pricing decision. Each vehicle has got a story. Some things count for the vehicles, some don't. Some people look after their vehicles better than others, and in those cases, we are willing to pay more for those prices. So we look at all our historic data. We look at what's going on in the market, and we can see those trends changing on a daily basis. So we try and keep as close to the pulse of what's going on in the market and on each specific vehicle. And we've also learned from that specific make and model in the past, how profitable it has been, how long it's been on our floors, if we were able to sell it at for finance and those kind of things. We use all those factors when we make that decision. I guess from a trucks and buses, Chris can maybe answer that a little bit better.
Yeah, so let's. So I'm gonna answer your question a little bit wider. So we really like to serve the entire market.
Yeah.
And so what that's meant is we might be in your garage this afternoon buying your vehicle, and at the same time, if you also would like to sell your trailer or your caravan or your jet ski or your motorboat, we like to serve the entire market. And we ran some numbers, our executive team, a couple of months ago, and we're now actually the largest buyer and seller of caravans in South Africa and motorbikes. So we've in a responsible manner got into all of those different markets. But your question specifically was on heavy commercial vehicles.
Yeah.
So with our acquisition of the Dome in December 2021, we've got quite a lot of real estate there, and we've opened up a lot there, and also in our branch in Richmond Park in the Western Cape, where we buy and sell heavy commercial vehicles. And it's still a smallish project, but we've got 50 million rands worth of inventory.
Yeah.
And so if you look on the website, and also specifically to the Dome, you'll see there is some yellow metal, and there are some big Actros trucks and big and small, so light, medium, and heavy commercial vehicles.
And we've hired a team of specialists in that field that sort of really know commercial vehicles, trucks, and we're building up that team. We're seeing that it makes very nice margin. So it's slow and steady for now, but it's looking very promising, and we'll probably increase the size of that team in the next couple of months.
Yeah. On the big macroeconomic side, I think we've all made peace with the fact that financing costs and interest rates will remain higher for longer. And of course, this obviously is a very important part of the question of car financing and the ability of our consumers to be able to sort of even change cars during the time. And I suppose that for a used car business, this represents a particular opportunity, particularly if you can leverage the trust that you have, the data efficiencies that you have, and be able to offer people the opportunity to say, well, actually, for as long as interest rates remain as high as they are and there's a squeeze on incomes, perhaps a second car option is the way to go. And here we are as a platform, we can get those. Do you guys regard this as this big driver for your expansion and your growth over the next couple of years, as long as we remain higher for longer?
I think you said a lot of things there, which I agree with, but I'd like to maybe build on one of your points, and that is, because we look to serve the entire market, we can also we can realign our focus at different times. And we took a strategic decision probably 8 or 9 months ago that with the market getting tougher, we should focus on buying more vehicles in the 150 to 400,000 rand category. And that has positioned us well over this tough economic time over the last sort of 9 months. And we're able to monitor that carefully, and we're able to realign quickly and adjust.
Yeah, and that's probably where you get the right blend of volume and affordability, particularly in relation to the current economic climate. Correct. Just one last question. Somebody's fascinated about this idea of a motor vehicle supermarket. If I had said that I'm going to be talking about supermarkets here, people would have had a very different idea, and then they see we buy cars. They're trying to reconcile the two. Why do you guys use the concept of a supermarket?
I think we like the supermarket from a volume perspective, but we also like it. I mean, we trade on a Sunday.
Yeah.
So, we made a board decision, must have been 5 or 6 years ago, that we're actually a retailer and we need to serve our market. And there are consumers who can only get to Dis-Chem on a Sunday, and likewise, they can only get to We Buy Cars on a Sunday.
Yeah.
So we'd like to believe we're serving the market. We don't have full teams, and we don't have all the branches open on a Sunday. But probably 12 or 13 out of 15 are open on every Sunday.
Yeah.
And on sort of on a 9 to 3 basis. So it's not a full day, but we like to serve our consumer.
Okay, yeah. I think I like the idea of a supermarket and, of course, the diversity that comes with it. Now, Willem, you get to give us the 30-second pitch. Why should investors look into this particular asset as the investment destination?
Kai, I think it's we uniquely positioned from the aspect that there's no gatekeepers in our business. Like Chris mentions, we can quickly adjust to the market conditions. If interest rates come down in a year or two's time, we can decide to let our stock look slightly different. So we've got the opportunity to really serve South Africa in the way it wants to be served. With that, we've got the opportunity to still grow quite nicely, and there's many opportunities, and we feel that the market is still unsaturated, and there's still a need for people to use our service. And I think there's a lot of excitement in our growth, and we've got the team that has shown that it can double and double and double, and hopefully we can do that again in the next 4 to 5 years.
All right. Thank you very much, guys. Unfortunately, we're out of time. Thank you very much to the WeBuyCars team. I've certainly learned a lot about this business, and I think a lot of those who were watching it last week probably now have much more to apply their minds to in order to make that investment decision. So thank you very much to the CFO, Chris Ryan, and Willem Klopper, who, of course, I served articles with at First Rand many years ago, the Chief Strategy Officer. Thank you. We are now going to move on to our next business, and of course, this is a business that I'm particularly passionate about simply because I have a passion for education, and that is, of course, the business that was born in Durbanville in 1998, the business of Curro Holdings. Now, Curro Holdings has a market capitalization of around 6 billion rand right now, and it's classified under the general retail consumer services side of our bourse. But it is also a business that, alongside its subsidiaries, obviously develops, acquires, and manages independent schools, primarily in the South African market, but also has a strong and an emerging footprint in Namibia and Botswana. The company does have quite a wide spectrum of assets and operating segments, and I think obviously a lot of us are very familiar with the Curro brand, but there's a Meridian segments that they have. What they currently do is that they operate Curro Preschools, the Curro Academy, Meridian Schools, Meridian Select, the Curro Assisted Learning, the Curro DigiEd, which is a very interesting dimension, but also the Curro Private College and the Curro Online Schools. And their particular, offering obviously covers the spectrum of young learners from the age of 3 months all the way up to grade 12. And I think when we then look at this particular business, we do know that recently, in fact, a couple of days ago, they did pay that most recent dividend of around 14.64. And of course, what we're going to be able to get into is really what the big mission is, and the big strategy and the big developments are. And to join us for that will be the CEO of Curro, Mr. Cobus Lopsha. But before then, we're going to give you a small snippet of what has been going on in the business.
Curro is a JSE-listed organization committed to providing high-quality education to learners from their earliest years of development to grade 12. At Curro, we provide quality education in a manner that provides our learners with the best possible academics while supporting their development into well-rounded citizens. We take pride in our excellent academic record as well as our ongoing curriculum development of esports and robotics. Curro Create is a creative engine focusing on the arts that help learners to discover and develop their creativity. Sport creates a sense of belonging and achievement. Our vision is to elevate Curro's role in the school sports landscape so that we may become trendsetters. Finally, we at Curro Holdings support the Reuters Ichaba Foundation, a non-profit organization committed to fostering talent beyond economic limitations. Together, we will reach new heights, inspire greatness, and shape a better future.
Great to have everybody back post that. Please don't forget to submit your questions online. It's great to have Cobus in studio with us today. Cobus, I'm sure you want to run through some of your recent developments, so we'll hand over to you.
Good morning, Corin and Kaya and our viewers. Thanks for your interest. So good morning, Corin, Kaya and viewers. Thanks for taking an interest in Curro. I'm going to share a brief overview of Curro with you today and just quickly reflect on recent financial results. And then I'm going to tell you the story of a school, which I think will help you understand our business model a bit better, give you a perspective on management strategic focus, and then motivate the investment case for Curro. Curro is on a mission to expand quality education to more learners across Southern Africa. This is an organization where every child matters, and I think we're really proud of the positive impact that we're having on the future. I think we've built a really impressive footprint across Southern Africa over the last 25 years. We today have 81 campuses with 189 schools. We have more than 6,700 employees, of which about 4,000 are teachers, and we have more than 73,000 learners enrolled across our schools for the 2024 year. In our experience, it can take up to 10 years for a school to mature. And so from that perspective, whilst our business is well established, it is still relatively young. About a third of our campuses are older than 10 years, about a third are between 6 and 10 years in age, and about a third are younger than 6 years. If we, I think, reflect on the most recent financial results, Curro has really demonstrated its resilience, particularly over the last 2 years, with increasing margins and yields relative to what has been a very constrained consumer environment. Our revenue increased by 32% to 4.7 billion rand in the 2023 year. The EBITDA that we recorded of 1.1 billion rand for the year was up 25%, and our recurring headline earnings also increased by over 30% in the year. I think importantly, and quite impressively, we've been able to increase our operating margins by about 2% over this period. The next slide, I think, is quite important. It depicts the growth in cash generation over the last decade. And if you look closely, you'll see that we reached an incredibly important milestone in 2023, because for the first time in 25 years, we generated more cash from our operations than what we utilized and invested in CapEx for our ongoing operations. And I think that's a very, very important piece of our investment puzzle, because it demonstrates the sort of power of our business model, and it shows that we've now entered the stage of free cash generation, which we expect will accelerate ahead of our CapEx over the next, into the future, really, over the next few years. If we then kind of think about the business model, Curro has a long capital cycle. And that's, I think, difficult and complex for shareholders sometimes, because it takes time. As I said earlier, it takes up to 10 years for a school to mature. And so I think to illustrate our business model properly, I'm going to tell you the story of a school. Now, I think Curro has plenty of potential for growth, and it offers much operating leverage once you get beyond a certain level of utilization of your campuses relative to what it costs to establish. So what I've done is I've aggregated the performance of 3 schools that was built in 2011 and 2012. And I've taken those 3 schools, I've aggregated them, they're different schools across different parts of the country, and I've taken their experience to show you the evolution of our operation, and specifically how CapEx was incurred and the profile and trend of returns and profitability. So up front, you'll see significant initial CapEx being invested to establish these schools, and that, of course, then tapers off over time as we go into really maintaining and kind of refurbishing and replacing key assets. I think if you then look at the profitability and the margins, you'll see that even at only using 75% of the capacity of our operation, you'll see that the EBITDA margin has now reached 38%, and the return on net assets invested is touching 20%. And it gives you a good perspective of what's possible in our operations as it matures. This particular graph is also important because it is the basis for our growth story. And what it depicts is the number of learners in each grade over a particular years, 2020, 23, and 2024. It shows the rollover of learners over time, and it demonstrates particularly strong demand at the high school level. And we are really confident that as an operation we can achieve at least low single-digit learner growth over the next few years if that rollover continues. And as an example, we have 7,000 learners in grade 8 and 5,000 learners in grade 12. And if you just have the grade 8 learners flowing through into grade 12, that offers, let's just call it natural or organic growth. And I think if we are able to maintain the learner count in the lower grades, we should be able to breach the kind of 80% utilization threshold by 2027. So now that I've explained the business model, what is management focusing on? I think the core theme for us is to drive shareholder returns higher. We've been blessed with shareholders who have funded this noble cause, but it's important that we also reward them for it. So we have a long capital cycle. Shareholders have initially established and funded the kind of portfolio of schools, and we into very firmly a stage of cash generation. So management very much focused on providing exceptional education, driving both learner numbers and revenue growth higher, improving the operating margin of our operations, and then fundamentally being very judicious about how we spend the cash we generate. So, kind of really being sensible about CapEx, still taking opportunities for acquisitions, but perhaps slowing down the greenfield expansion to enable us to provide free cash flows to shareholders and to enhance returns through either share buybacks and or higher dividends. So why should you invest in Curro? I think it offers a really rewarding opportunity for shareholders who are serious about sustainability and also about the returns that they can achieve with their investments. The group has generated significant growth momentum, and it's built a really powerful brand in education in this region. It has a large network of schools, and we are market leaders in catering for different market segments at relevant price points with a unique and cutting edge education to really satisfy very strong demand. The business is led by an experienced and talented team, and I think we've demonstrated our ability to drive financial returns higher also for shareholders. And despite, I think, what has really been a much publicized and challenging economic environment, I'm very confident that this business can really achieve predictable and growing returns and cash generation over the sort of next few years. So what does that mean for you, and what should you expect as a shareholder? I'm going to give you a few data points which I think will be informative. I think the first one is that at this stage, whilst we've established our portfolio, we're only using about 73% of our capacity. So that excess capacity can be filled and offers substantial operating leverage and value. The group's return on capital employed has increased to 7.6%. It was 5% 2 years ago. And I think from our perspective, we expect the return on capital employed to keep driving higher, to be at or above 10% in 2026, and to keep exceeding, increasing from there to exceed our cost of capital and to keep growing beyond that. We expect to invest about 800 million rand in our operations in CapEx in this year, in 2024, and as much as 2 billion rand, 2.1 billion over the next kind of 3 years. And really importantly, we're going to maintain the debt levels in our operation, which I think bodes well for shareholders insofar as that free cash is orientated towards shareholder equity return. So in conclusion then, Curro is more than a business. It is a movement, I think, with real purpose. We are really confident that our growth momentum will continue. Our models are efficient, they're scalable, and they optimize service and profitability. We think the business is resilient, and I think that's demonstrated by our improvement in both profitability and shareholder returns over the last few years. And I think we, as an organization, are deeply committed to providing high quality education to many more learners in this market. So in conclusion then, I spend a lot of time traveling across our schools in the country, and I can only say that the children of South Africa really inspire us, and that as an organization we're very hopeful and profoundly, I think, excited about a future bound with opportunities. So thanks very much for having us here today. I'm happy to take some questions.
Thank you very much, Kobus.
Yeah, thank you very much, Kobus. You know, I think for me, being at the JSE for such a long time, I mean, I remember the day that you listed on the JSE. I think you raised a mere 300 and something odd million rand on listing. I mean, as we look at the capital raise that you've raised from shareholders, like you had mentioned, you know, shareholders have really funded your business. That's to the tune of 6 billion rand. I mean, you've just grown phenomenally as a business. And, you know, we can only but, you know, I think from my side, definitely applaud in terms of what you've done to the group. I don't know if you've got any particular questions around the numbers.
Yeah, I think, you know, when we obviously look at the Curro business, one of the points of interest is just how wide across the spectrum of different price points and different offerings you guys have been able to position the business. And I imagine that in the aftermath of COVID, where obviously incomes are squeezed, the question of whether people could migrate across different price points and still remain within the group was a very important one. But I think also when you look at the bigger macroeconomic environment, it is very clear that it's going to be challenging for a very long time. So I think that ability to capture the market at different price points means that you can say to Patricia that, well, maybe at that meridian we have a pricing issue here, but how about that select, or, you know, in the other around? Is this part of the big strategic idea that you need to capture the market throughout, you know, the different price points? That's Curro.
Yeah, I think when you talk about capturing the markets, I mean, we have 73,000 learners, and there's 13 million learners in South Africa, more than 13 million. And I don't think anybody can have education for themselves. It's not possible. What we're seeking to do is to extend and expand opportunity. And we do so by bringing facilities as close as possible to markets and executing them at relevant price points that work. I mean, to some extent, you know, there's a cost to paying a teacher and to have quality facilities, and that, you know, the market must bear. But our ability to tailor facilities and curriculum execution smartly relative to what's required, I think helps us a lot. So if you reflect maybe just on our market, if you look at just price points, effectively a quarter of our, if you kind of break it up into quarters, a quarter of our market is paying less than 3,500 rand a month. A quarter is paying between 3,500 and 5,000. A quarter is paying between 5,000 and 7,000, and a quarter is paying above 7,000 a month for the education. I'm averaging, and of course higher grades is a bit more expensive, but that gives you a perspective on what we're trying to do. So, and of course, our ability to offer a high quality product to our market should, you know, kind of drive this flight to quality which we see from families. You know, it should really stimulate that.
We have a question from one of our viewers, and the question is, how do you train or equip your teachers to ensure a certain standard of quality across all their schools? And I think you can also probably tap into the 3 different types of curriculums that you guys offer across your entire school chain.
Yeah, so I mean, it's a great question, because that's what this organization is about. So we fundamentally have, you know, we've got 3 curriculums. We have, if I take last year's matrics as an example, we had 2,300 learners write the IEB, the Independent Exam Board exam. We had 1,700 learners write the NSC, the National Curriculum, and we had about, I think we had just on 100 learners who did the Cambridge exam, some of it through Namibia, and then of course with 2 schools in South Africa. So that's the curricula that we drive, and we monitor and manage that execution very, very deliberately and carefully. So the national scale of operation allows us to have a very strong central curriculum support department who is both responsible for training, for engagement, for assessment and ongoing monitoring. We write standardized exams across our portfolio, so that gives you a really good read on how a school is performing relative to its peers. And so all of these have been very intentionally put in place to drive the quality of execution. And of course, where we do pick up a challenge, again, given the scale of our operation, you know, we can replace a teacher, we can kind of launch an intervention, we can assist with material and everything that goes with it. So I think from that perspective, very, very powerful. We work closely with government, of course, as well in our national curriculum execution in the districts. And but yeah, so for us, high quality is just that. We've got to execute it. We've got to appoint smart people. We've got to give them the freedom and ability to execute. But we've also got to make sure that they do it.
Yeah. You also mentioned, I mean, the long, a capital cycle that is required in order to obviously get a school done. And you said that a third of your schools are over 10 years old. So you're probably now at the business that's turning around 25 years and beyond. You're probably reaching sort of the third iteration of that. Now, when we talk about the maturity of schools, do we define a mature school as one where you essentially have the entire spectrum of 3 months all the way up to grade 12 filled up, where there is presence across? Or is it simply a school that's been there for a long period of time? What is the definition of maturity as far as you're concerned?
Look, it's a great question, and to some extent, it's whether you've sustainably offered an opportunity. So in some ways, until you've had your first matric class, a community, it takes a bit of time to trust your execution.
Yeah.
And so we'll find, for instance, that our first matric groups are often doubled within 4 or 5 years, just because the results, I think, are compelling. And if I reflect on last year's results, we achieved a 99% pass rate in IEB and a 96.5% pass rate in NSC, and that's impressive relative to our peers and education in general. So having all the grades is a key component, but also executing well in those grades is important.
Yeah, and I think also one of the points that we noted is that, there's a blend between the greenfield operations where you literally commit yourself to that 12 or 15-year journey versus the acquisition. And I think perhaps in recent years, the blend has been a bit more evenly spread than it was before. And obviously, because historically we've done a lot of greenfield operations, the balance is always going to be like that. Do you find that cuts down the capital cycle and perhaps translate to a much faster pathway towards returns for shareholders?
Yeah, if I reflect on the portfolio, we developed 2/3 of our 189 schools, and we acquired the other third. So we've got a good blend there. The benefit of acquiring is that you also inject new ideas, fresh talent. Sometimes are able to gain great facilities that you just can't replicate, and that you complement your portfolio. And it certainly is a quicker route to return if you make a good acquisition. But I think if I look at our portfolio overall, we really have a large national footprint now. We're still excited about making acquisitions. We're holding back a little bit with greenfields, mainly because we've already got the facilities, and they're 73% full. So we think we need to kind of just fill up a little bit more before we drive into the next opportunities. But if you look at South Africa's urbanization and the dramatic need for schooling in our suburban areas and on the peripheries of our cities, there certainly are opportunities that we have land banked and are still pursuing.
So, Kwibish, you speak a lot about South Africa. Outside of South Africa, is that a consideration for the business at all?
Yeah, so we actually opened 2 campuses in Namibia this year. So we're very much active outside of South Africa. I think though that we are cautious to expand too far outside of our core area of expertise until that area is really generating the kind of cash flows that it should. And so it's a kind of a stepped approach. If the business was initially established, then rapidly expanded, and then sophisticated, we're now in that moment where its business model has to deliver on its promise, and it's doing that with the kind of cash it's generating now. And that'll enable the next set of opportunities, which may well take us offshore into exciting new markets.
Yeah, definitely some strong possibilities out there, and I think obviously the sub-Saharan market is always ripe for some new talent in the South African market. The 32nd page, Cobus, why should investors bank Curro?
I think, there's a lot of talk about sustainability. I think we have one of the most sustainable operations in the world. We are actively investing in the future, and we are doing so at scale and with professionalism, and I think we've been very blessed to have the backing of shareholders to this point. But we need that to continue if we're going to kind of create the next 100,000 opportunities for learners in this region.
All right, no, thank
Fantastic.
you very much.
Thank you very much. I think that's a wrap. Thanks so much, Kobus. Fantastic having you in studio.
I'll visit you in Durbanville one of these days.
Thanks very much. I look forward to that.
Trying to escape load shedding, right?
Yes, I did bring some enrollment forms. Are you?
Yes. I want to get back there. Now, Patricia, we're moving on to a business that you love so much, you decided to dress up to match them.
That's it. Purple jackets, Purple Group. Right.
Yeah.
So for our next presenter, we've got Purple Group. There's going to be in studio. They are listed in the investment services sector with a market cap of approximately 1 billion rand. Purple Group is a financial services and technology company which engages in trading platforms, fractional property and crypto assets investing, retirement fund administration and asset management. Many of us know Purple Group through the Easy Equity trading platform. And Easy Equity was established in 2014, and the company's offering has really tried to make investing easy. It has also positioned itself as the cheapest platform in South Africa from a trading perspective. We do have Curro, who's the Chief Marketing Officer, in studio with us today. But before we cross over to them, let's quickly have a look at that corporate video.
Purple Group empowers anybody to grow and protect their wealth. Since 2014, the group has grown from a small fintech to a diversified business offering both retail and institutional financial solutions and products. Invest in local and international shares, property, managed portfolios, crypto, ETFs, retirement solutions, or trade. In 2024, there are 2.17 million registered users, 944,000 active clients, 12 investment wallets, and 4 markets. Easy Equities is regularly adding new products and services to help people grow and protect their wealth. Most recently, Easy Credit Lending and Easy Protect Life Insurance. Easy is also constantly hitting milestones with over 1 billion rand now invested in unit trusts and more than 20 billion rand invested in ETFs. Our growth isn't just about us. It's about our people, our team, our community, and our shareholders, and finding innovative ways to make people's lives and their financial futures better.
Welcome back. It is, of course, our 2024 edition of the JSE Investment Forum. We've already had really compelling presentations from businesses that are telling us exactly what it is that they're planning to do and what their big growth strategies are. But of course, right now, we're moving on to a bit of a different one because we're talking colors. So it's the Purple Group. So we decided to present them here. But also, quite importantly, what makes our next presenter different is that he's a person who's remarkably familiar with studio setups because when he was much younger, he actually used to work at the BBC. So, Carol, you definitely must be very comfortable with this space. So go ahead and give us an insight into what the Purple Group is all about.
Thank you very much, and it's great being here. I really appreciate it. And it's the day after we released our interim, so it's a good time to chat Purple Group. I'm very nervous though, because I am representing my fabulous colleagues, over 100,000 investors in Purple, and over 2 million clients. So I hope I do a good job for them. But let's get started. So Purple Group is a brand that's made up of the entities that you see listed there. GT247, which is our trading platform, Easy Asset Management, Rise Easy Retire, which really focuses in the institutional space, Easy Equities, which is well known to everybody as our platform where you can invest in local equities, foreign equities, and a whole bunch of other things that we'll talk about shortly, Easy Properties, and Easy Crypto. Now, 10 years ago, Purple was really everything except Easy Equities. 10 years on, Purple Group is Easy Equities and the brand and products that flow from it. And for the purposes of this presentation and the investment case for Purple, I'm really going to be focusing on Easy Equities. So 10 years ago, Easy Equity started. Our birthday is in October this year. And so 10 years of Easy Equities, and personally myself and our CEO turning 50 this year, it's a good time to reflect on where we've come from and what the future holds for this business. And we firmly believe that Purple Group Easy Equities, it's not been an overnight story. It's been a very intentional, focused strategy over the 10-year period to lay this very strong foundation that we are really happy about, that the market is responding favorably to after our interims were released. And we really focus in Easy Equities about keeping things simple, keeping things easy, not making investing intimidating. And I must congratulate the JSE, because I think it was always such an intimidating place, and to come here and to be warmly welcomed is really special. We had some listings here this morning as well. It is a great atmosphere. But at Easy, we focus on keeping things simple. And it's that famous Steve Jobs quote on how hard it can sometimes be to be simple. And Easy Equities has tried to stay really focused on our core purpose, which is helping people, all kinds of people, grow and protect their wealth. Simply put, democratizing investing for all. And I thought I'd look a little bit at what retail investors say about some of the amazing companies that have been presenting here today. And it's been wonderful listening to their stories. And so starting off with Sun International, on the Easy Equities platform, there are over 34,000 people that hold that share. The NAV is roughly 66 million. There's one person that holds 9.4 million rands worth of shares. And it's an interesting thing because often when people talk about easy equities, they think democratization means just for the people who can invest 5 rand or 50. Now, we love those investors. We love supporting them. We love growing with them. We love providing education. But we also love the investors that were intimidated by investing or that found investing difficult or hard. People who can invest 9.4 million rand in a single share. And so we really have the whole gambit from an economic perspective on the platform. Average age invested in Sun International is 35. On Easy Equities, our average age is 32. And why this is important from an investment case is there aren't many, we believe, investment firms that can talk to a base that is that young. Now, our CEO in releasing our results spoke that many of our users are in their teens. They're the poorest they're ever going to be. As they enter the job market, as they grow, as the 32-year-old gets promoted, they're going to have more and more money to invest. And so we see huge potential in this base of about 1 million active clients we already have and over 2 million registered clients. And we're really, really pleased by the average age. The youngest investor in Sun International is 1 year and 6 months, and the oldest 96. Now, I love the 96-year-old. He's going strong. He probably had these shares for, I don't know, decades. But it talks to, if you look at a young investor at that age, obviously their parents are investing for them. But we've got many teens on the platform as well. They're growing up with us. They're giving us feedback. They're telling us what they don't like. We love that. One of the things that I really enjoy about Easy Equities is the engagement with our community. And we never think that there's bad engagement. If we make a mistake and we hear from it from the community, we engage, we fix, we change, we pivot. And so growing up, or young people growing up with us, is phenomenal. And there are people who, you know, are now 20 that I've known since they were 10 because they've been with us, which is wonderful. The gender split there is something that is a little bit higher than the average on the Easy Equities platform, and obviously we need to drive that far closer to an equitable 50-50. But we are pleased by the tremendous progress we're making from a gender representation. I'll skip through the other three because I wanted to highlight just a few points. We Buy Cars, these stats, this was from the day that they listed. They got 17,000 odd Easy Equities investors on day one, 43 million, and the rest of the stats speak for themselves. But part of our investment case is also community engagement. And for those of you who follow us would have seen the tremendous power of the community when We Buy Cars listed. They were speaking about it, they were lapping up the research, they were asking good questions, they were exhibiting one of the key factors of retail investors. They are smart. And that listing provided ample proof of that. Curro, we've just heard from now, Kobus and his team. Interesting if you note their number of investors greater than the previous two companies. The NAV, smaller. And so why that's important to highlight is we see huge potential and we're engaging more and more with people like Kobus now to say to them, you've got a great opportunity to talk to your 40,000 existing customers that love your brand already to get some more NAV. Explain to them what you're doing. Explain to them like you've explained today here at the JSE. In addition, you can talk to 1 million engaged investors. Now compare that to placing an ad in a newspaper that some people may or may not read, a magazine that people may or may not read, a TV program that some people or investors will look at and some aren't. On Easy Equities, it's a captive audience of 1 million odd people that all want to invest. So we're increasingly engaging with these CEOs, and I'll talk a little bit more about that when we talk about non-trading revenue and the opportunities we see there. JSE I put there because obviously we're in the home of the JSE, and for me there's huge potential for the JSE with all the exciting things that are happening. And personally, and as Easy Equities, we have a bit of a bugbear about people saying that there aren't new listings, only focusing on equity listings, whereas there's a tremendous amount of new listings on the JSE. And I would encourage people to follow the social media to be exposed to those listings and to the opportunities that the JSE presents. And then Purple Group, biased as I am, but I'm presenting the investment case. A tremendous number of investors. We're one of the largest held shares, and we'd love some information from the JSE on that to see which are the biggest shares and get some information out. And I'm very, very proud, as are my colleagues, on that gender split, which we're improving. And for the 97-year-old investor, at your 100th birthday, we're all going to be celebrating even more. So I put this slide on not to look at the detail, But to show that 10 years ago, as I said, Purple Group was everything but Easy Equities, and look at Easy Equities forming part of Purple Group now. Sanlam owns 30% of Easy Equities. Easy Equities now entails Easy Asset Management, businesses in Australia, business in the Philippines, teams that are based in Portugal, and in a short space of time, relatively short space of time, this business has grown and expanded. The fundamental thing, though, on this organogram is it's all about people, the Easy Equities community. As I mentioned when I started, over 2 million registered clients, million active investors, 144 investors just on Purple, just on Easy Equities. There are people that hold that share externally. The community that talk about us. For me, the team that we have at Easy Equities, which is a small, phenomenal team, that is the power of this brand, and it's one of the fundamental reasons to consider investing in Purple Group, the strong, easy community. So what are the 4 key value drivers that we look at? And we're pretty obsessive about these, and it's only 4. I've got a summary here from our interim. So we look at our revenue, our assets, our client growth, and our operating costs. And I'm going to delve a little bit more and spend a bit of time going into each one of those. But as a summary, our revenue is up. And we're going to talk a little bit about trading revenue and non-activity based revenue and what that means. We're going to talk a little bit about institutional and retail revenue. Both of those are up. We're going to talk a little bit about assets. Now, assets have grown on the platform as a function of the market starting to turn, and who knows when we are in the strong bull market, who knows if it's going to last the traditional 6-7 odd years. But despite those headwinds that we've had in the market, we've had strong asset growth from net inflows, clients depositing. In February, we had our record deposit month, over R1 billion of new cash onto the platform from retail investors, over R1 billion. When we started 10 years ago, we were celebrating when it was 10 Rand, 100,000 Rand, over R1 billion of new money, and we're seeing that more and more in terms of client assets. And now with the bull market and ongoing deposits, there is really an exciting future. Client growth, now it was easy to grow when we were off a base of 0, but despite that, we continue to grow at 12.5%, and we're at that 944,000 active clients, and we'll talk about how we get those clients and the cost. And then finally, our operating costs are down. I'm now going to go a little bit into each one of those. This really shows that from 2018 to now, we've grown to the 945,000 active clients, and active means they deposited, they've got a wallet, they're using the product, they're highly engaged with us. We don't acquire clients by paying lots of marketing money. We get our clients through referrals, and we get our clients through our partnerships with entities such as Capitec, Discovery Bank, Sanlam and Satrix. And for us, one of our great joys is that it's from referrals. People telling their friends, telling their family, telling their kids to join Easy Equities. And so the cost of acquisition of a client is very, very low. And it continues to grow. Even on weekends, we get 400-500 people signing up on a Saturday, on a Sunday. Every day, this continues. Now, for us, this is something we're proud of, but quite frankly, the tax base in the country is, I think, 7 odd million. That's the potential for us. We're certainly not going to rest until 7 million people are clients and have the ability to invest in the choice of investment. So that's another important point. We've only got 1 million odd active clients. We've got a few more million to go. You can see the trajectory there, and we're going to ramp that up. Important to note also that we maintain these clients. We don't lose our clients. The client retention is excellent. And we work hard at ensuring we're listening to our clients and keeping them happy. Client assets I spoke about. We've split it there into retail and institutional. That's a little bit of diversification for us. So our institutional business, the Easy Retire Rise business, has got those assets under management, and you can see the growth year on year. You can see the percentage between retail and institutional. While we're not going to slow down on the retail, I spoke about the 1 million to the 7 million, we're also working hard in the institutional space. And we've got some big brands, some massive listed companies that trust us with their employer assets. We take that responsibility very serious. We're very keen to further disrupt this market. We think it's really ripe for disruption. And on the asset management side with the institutions, it's a real big focus area for us. The retail client assets by cohort. So cohort for us really is when somebody registered. And if you just look at the graph at 2020, and you look at the assets that people had in that turquoisey color, and how that's grown from 2020 to 24. It means that the people in 2020 that joined us, how those assets have grown. The people who joined us when we started 10 years ago, every year their assets grow. They grow because of the market. They grow because of good client behavior, because of deposits. The value of our clients, I think, is something that's often misunderstood. Not only the quantum of the million, that I'll remind us we're going to grow to the 7 million, but the value of each one of those clients after year 1, after year 2. If you look at our data, and it's all in our financials, the value that we get from a client after year 3, year 4, it's exponential. Clients are putting on more assets and adopting products quicker as they're joining us. If you forget everything else that I say today, for me, this is the most important slide. Revenue, we spoke about, obviously client numbers and assets leads to the revenue. Revenue has grown across our group with the exception of Easy Properties, which I'll talk about shortly. You can see our core platform there, Easy Equities. Great progress Rise, which is Easy Retire, the institutional business. Crypto is having a sterling time, and we're at the start of that. I mean, we've got Bitcoin halving coming on. We have the ability for people to invest in individual coins, but also in a number of crypto bundles to de-risk it. And there is a lot of innovation that's coming from our crypto team, which is driving other behaviors within the group. Super exciting. Easy Properties, the revenue did not grow, but in Easy Properties, we've got a business that was started in the heart of COVID. We've already got over 100,000 active clients in Easy Properties. That property portfolio is approaching $500 million of people invested in properties. We've got 40, 50. Currently, we've got our first industrial property on there. And users on our strategy get dividends. Our philosophy here is that after 7 odd years, we'd look to selling some of these properties. And so there's many opportunities for deriving revenue from Easy Properties. Institutional retail split in terms of revenue, it's just showing that we derive benefit from both aspects and that both are up. The activity and non-activity I want to pause a little bit on. So the activity-based revenue that we have really talks to a client's portfolio. So them buying and selling, simplistically, and us making money off that, off them using our FX and really portfolio linked. Whereas non-activity income refers to asset management fees, the management income that Easy Crypto would derive, our Thrive fee. And why this is important is we've now been through cycles, bull, bear, high inflation, low inflation, and we're increasingly making this business one that's robust, which is important for shareholders naturally, in any kind of environment, so that it's not cyclically linked. So whether the markets are, as I say, bull or bear, that there's non-activity and activity revenue. And we're going to grow this. You can see that the non-activity had a great performance, growth also in the activity driven, and with this market turning now, we're anticipating that to continue strongly. And we've seen that in the first few months, the second half of our year. Operating expenses, we are focused on maintaining these and driving them down. We're becoming more smart about it. The cost of service is the big one that you see there, that's looking after our institutional and our retail clients. The client acquisition cost, as I mentioned, is low. And the 18 million that you see in there, a large chunk of that, about 11 million, is linked to our Philippines operation, where not only have we got a really strong partnership with GCash, doing tremendous work with the regulator there, and anticipating some revenue flows there in the not too distant future, but also where a number of our engineers are based there, and we're working hard at having an operation 24/7. There are also a lot of, there's probably about 7 million in there of non-recurring once-off costs. So we're anticipating we're going to maintain this and drive it further down, which is a big focus for us. This is something we're really proud of, servicing our clients. We've got that cost on the retail down to 81 Rand compared to our competitors, compared to financial services, cost of acquisition, cost of service, it is extremely low. And why this is important, and I'm going to conclude after this slide, is based on our strong client growth ongoing, our strong asset growth ongoing, our strong focus on operating costs. We now have the ability to introduce new products. Now, we don't do these willy-nilly. We do them if they are to the benefit of our clients, and our clients ask for them and tell us that they want them. If it fulfills democratization, if it helps us to grow and protect a client's wealth. So Easy Protect is a life product which we believe is really going to revolutionize life insurance in this country, which is a massive industry. Why do I say that? Well, first of all, our cost of acquisition of a client here is zero. So we've got 1 million people, active clients, and the 1 million that are registered as well, that we can promote this product to. It's life insurance that grows, that decreases as your assets grow. So fundamentally, you don't just pay money, a premium over to an insurance company, you invest it. It's a very flexible life product. It's been whitelisted, so not everybody has access to it as we develop and refine it. Sanlam is our underwriter here. They're hugely excited about it, and they're providing a lot of support. Easy Credit. Often people could use, rich people, people with lots of money and big assets could go and pledge those assets at the bank to borrow money. Retail investors traditionally couldn't. They can now on Easy Equities. Whether your portfolio is 50 Rand or 50 million Rand on Easy Equities, if you've got qualifying credit, qualifying underlying assets, you can apply for credit. And it is fantastic to see how people are doing this and how smartly people are doing it. They're not doing it to cash in, to go and gamble. Some of them are doing it short term to fund school deposit fee, where previously they had to sell their share, perhaps at a bad time. They do it to fund something like a school fee deposit, and they then can pay back the loan very quickly. And you compare the interest rates versus credit cards and other debt, we're really, really proud of the need that this fulfills. Easy Properties, we've only got just over 100,000 clients there with that portfolio, as I said, approaching $500 million. There is so much more opportunity to cross-sell and expose people to our other products on the platform. Government bonds was not easily available. We can buy that in our TFSA account in Easy Equities. Within the first little bit of launching, we had over 20 million in bonds. So it's easy for us to scale and to offer new products, and we're hugely excited about that. So I conclude with that by saying a massive thank you to the JSE. Look forward to chatting to both of you now, but to the Easy Equities community. 10 years ago when we started, there were lots of cynics. The majority of people were cynics, said it couldn't work. Retail investors weren't clever enough, and many other reasons. Over 1 million people have proved them wrong, and a small team at Purple Group have proved them wrong, and a community of Easy Equities. So to all of you, thank you, and look forward to lots more investment and making money not only with Purple, but with the other brands. Thank you.
Fantastic.
Wow, yeah, quite an interesting presentation there, Curro. I've got so many questions, but let's start with the questions that we've received from our YouTube link. And the first one is, does Easy Equities have an inbuilt mechanism that protects shareholders, especially when some companies go bust, such as we've seen in the case of Ellie's and Tongat and others?
So short answer is no, but long answer, and it's a great question, is we really focus on education. And so a big thing that we drive through the team is do your research. So know before you invest and have a reason for investing in something, and then stick to it. So don't invest willy-nilly. Understand why you're investing. And so doing research, which we provide, doing background checks, engaging, asking questions, and there is not one stupid question when you're an investor, is the best way to protect yourself.
And maybe just off the back of the research question, I mean, do you do research for all the stocks that your clients are investing in, or is it a select few? How does that work?
So we don't do enough on it, and we'd love to expose more. So we've got a couple of internal people that do it. My one colleague that's here today was holding court with the CEOs presenting today because he was gathering information, and he's going to be covering all of them. So we don't do all of them, and we'd love to. And so again, it's extending the hand to companies. Give us the information. Come talk to the investors. When we've got webinars, we've got hundreds of thousands of people that pitch up to listen and learn. And we can certainly do more, Patricia, and we'd love to collaborate with anybody who's keen to do so.
How do you then address the inherent risk of somebody saying that, well, I only invested because you guys promoted it? So do you create a distinction between saying this, we're simply providing a platform for Patricia to invest in that share? Or does a person say, wait, not only did you provide a platform, but you actually actively, advocated or lobbied for this share, so therefore if something goes wrong, I should hold you accountable? And I suppose that's a big part of the education drive that is necessary in order to get investors to understand the distinction between providing information and advocating for something and the consequences associated with that?
Absolutely. And so we look at the data over 10 years. Retail investors are smart. Their portfolios are diversified. They're not traders. They're not in and out. So as much as some people in the market would want us to believe retail investors do stupid things, they're not. So yes, it's about education, and we take a step back. The first thing we say to people is, it is proven across the world the best way to generate wealth is through investment. If you want to make a quick buck overnight, go to the casino or be a criminal. Either way, you're going to probably lose your money. If you want to consistently make money, you've got to invest, whether it's £5 and do so consistently. Diversify. It's not rocket science and it's not magic. That's the process. So if you do that, you do your research, you invest in a company, over the long run, you should make money. And that's not Easy Equities saying that. That's what all of us are saying. That's what all the listed companies are saying. What Easy Equities does is we don't say you must invest in that company or even in a share. You might think to your own risk profile, I need to invest in USD shares. We allow you to do that. Or property or crypto. We are the only place where you can do all of that easily and move between them.
There's another question from Bennett. Carl, you mentioned Sanlam and other companies. Can I open a child trust on the Easy Equity platform and link with Sanlam? Please assist on that. I don't know if the question is clear enough. And just a follow-up question. Will you open an easy trading platform, or are you sticking to long-term investments?
Cool. Both of those are great. So the easy one, the first one is go to support.easyequities.co.za. We've got a wealth of information there. It answers that question easily in terms of minor accounts, linking accounts, etc. Support at Easy Equities is the best way to get information. And also, retail investors have proven that they, as I said often now, they're smart, but just trust yourself. Don't think that it's so complicated. Go read the FAQ. You'll get the answer. And then on the second one, sorry, which was
the second one was about opening an easy trading platform.
Oh, thank you. So we have about 5% of our community that exhibit trading behavior already on Easy. And Easy Equity is not a place to do trading because there's not live pricing. You can opt for live pricing, but it's 15-minute delayed from a cost perspective. So we've got GT247 where you can trade, and we are moving towards Easy Trader to better support the 5% of the community that are traders. But I would encourage you to look at gt247.com. I hate making promises about the future, but in the next few months, so soon, there'll be some more on Easy Trader.
I think also when we talk about the question of democratization, you obviously want to have access at the price point, and I think you guys have done a good job of that from the slide that we saw there. But I think also to widen the market and to widen the reach, we need to have a much greater awareness of investment products, investment risks, and investment permutations out there. Now, holistically across the entire market, are we seeing enough of that education, or is it still a matter of the little that you guys do represents a fraction of what should be done by everybody else?
Yeah, great question, and I'm passionate about this. It's a fraction, and quite frankly, it's unacceptable. Everybody talks about education, and then the way we do education is we're doing it in fancy boardrooms in ways that make people feel uncomfortable. And I'm not talking about and I don't like the term, but unsophisticated investors. I'm talking about somebody who's 40 years old, who's a woman, who's smart, who's got a job, who feels alienated from investing. Yeah. So it's not just basics of investing that need to be taught. It's actually being able to feel comfortable to sit here and have a conversation with you guys to talk about investment. It's stressful for me. I work in this industry because it is intimidating. So I don't think we do enough of that at all. And that's why a session like today is so important. Engaging with the CEOs, seeing how those CEOs, that's what people need to do as investors. You own that company, talk to the people who work there, talk to the shareholders. We've got to get away from this it's so complicated. So it should be fun. Easy Equity started because Charles Savage, our CEO and founder of Easy Equities, was talking to his wife and kids. He's in the investment space, he knows it well. They said to him, it's not a place that we want to be. It's boring, it's confusing, it's intimidating. And that's why he started Easy Equities for all of us. So we can do more, and investment has got to grow so that we do well, but everybody's to do well. I'd be delighted if our competitors do well. We are delighted. It grows the base. I mean, when we started, there were very few retail investors. There are far more now. We've more than doubled that, and we need to do far more.
So I've got a question. How do you convert your clients from, kind of being the inactive to the active? And I also believe that you're going to be looking at active ETFs. What does that mean? Any particular themes, thematics that are kind of coming out of that in terms of what you might be bringing to the market as products?
Thank you. So in terms of, we've got journey. So a client registers, and the first step is that we've got to get them funded and then invest in a particular product. And so we work with the data. We've got a person in my team, and that's what he lives and breathes, that is to look at when people have registered, how can we help them fund? And there's a lot of tools. There's journeying, email, in-app messaging, education. So we do a lot of work around that, and our stats are high and increasing the whole time. Once somebody's funded to investment, it's very, very high, but we focus on that. And we ask clients why they're not doing stuff. So not only do we look at data, we engage. Why did you do this? Why didn't you do that? If we offer that, would you? And we've got a highly responsive audience. So when we send out a survey, we get tens of thousands of replies. So on the active ETFs, we're listing 2, and it's really being driven from our Easy Asset Management team. And there's a whole long session on that. And I think what would be great is to do some education with the JSE. And I mean, and I know, Patricia, you drive a lot of this with our users on why they should consider active ETFs. I mean, we've got now over 1 billion people invested in unit trusts. The ETF market on Easy Equities is massive. About half the buyers are that. I think there's a great opportunity to say to people why they should be considering active ETFs, because there's a number of wonderful listings. I'm sure you've got a whole whack more coming down the line. We must talk to our community and tell them about that. I'm biased about the easy ETF ones, but we're agnostic as a platform, so we want to promote all of them.
We're very happy to chat to you. I mean, we've seen phenomenal growth in terms of the new products of AMCs and now, of course, AM ETFs. So, of course, for us, we're very happy to partner with the markets.
Great. And I want to repeat, the people with this narrative that they want to drive about, no new listings. There's a ton of listing opportunities on the JSE. On Easy Equities, there's a ton of opportunities through property and crypto and many other things that are coming down the line. So users are spoiled for choice, and we've got a wonderful market, and it's our job to help people invest.
I've got another question. So your Asia business, one last question. Lessons learned, you've obviously been investing quite a bit of money, going into the Philippines and Asia broadly. Kind of what keeps you up at night? Any lessons learned, any takeout? I know you said that you're looking at kind of getting some revenue out of that part of the business, but just a quick overview.
I can do a quick answer on that. So in terms of lessons learned, is a lesson that we all knew, but we've learned again, is that our CEO is extremely passionate and can't help himself, and he's an eternal optimist. And so he sometimes forgets the reality of life and regulation, etc. And so we're working hard with the regulators, who are fantastic at building relationships. It's taking longer than anticipated. So that's the one lesson learned. But it's helped us to establish a really strong operational foundation in the Philippines so that we can be a 24/7 business with some fantastic people and some fantastic developers there. So we're delighted with our partner. We've got the best partner, we think, in the region, GCash, and they've got tens of millions of clients. We're working really well with them, and so it's a market that we're super excited about.
There is one question from the viewers. Sorry, I know we're running a little bit over time. Will there be a Bitcoin ETF?
We would be delighted to have a crypto Bitcoin ETF tomorrow. And we would love you, who's ever asked that question, and thank you for it. Get onto the regulator, get onto the JSE, because if it was up to us, we are ready. And we would love to do it tomorrow because we think it's a great opportunity. And what's frustrating for us from a South African perspective, if you look at the opportunities that foreign investors are having in the US with crypto ETFs. I mean, they're available on our platform in the other wallets, but we need a South African one. So thank you for that question.
And maybe just from the JSE side, we of course are working very closely with the regulators and trying to get everything done and all that needs to be approved for the issuing of these Bitcoin ETFs. But it is not all within our control and within our power. But we are definitely very excited about the growth opportunities, and we're doing absolutely everything that we can in our power to drive some growth in that particular market.
Yeah, a very important developments across the line, but unfortunately we are out of time. But before we knock off, we are actually going to show you just a short video about the other offering in the JSE, and that's the JSE Private Placements.
Introducing JSE Private Placements, the brand new state-of-the-art digital platform that smartly connects private companies with investors. If you're looking to raise debt, equity or pre-IPO funding for your company, or if you're an investor on the lookout for new investment opportunities, JSE Private Placements is the perfect one-stop platform for you. Powered by next-generation global fintech leader Globacap and driven by the JSE's deep understanding of the scaling up process, JSE Private Placements is revolutionizing the fundraising and investment world. Turn your blueprint into a reality with JSE Private Placements today. Register at jseprivateplacements.co.za.
thank you, Kaya, for co-hosting with me today. It's been definitely interesting. Any closing thoughts?
I mean, it's felt like a journey. We start off with Sun International, long-established business from the 1960s, and also to the more modern ones. I mean, cryptocurrency is probably 3 days old compared to a business like Sun International, and I think it sort of shows the spectrum of different opportunities, investment opportunities, and the different businesses and dynamic businesses that exist in South Africa. So I think it's been a very informative session for me. It's been very engaging, and of course, we've been very fortunate that the executives who did share their time with us have been very well, briefed on what it is that we're trying to communicate out there, and we hope that we're able to provide much more information and insights onto the different businesses to our various viewers out there.
So as much as what we're trying to get our viewers to actually invest in these shares, I hope that perhaps you would also be taking that punt, against some of these businesses, some of these opportunities. I mean, great businesses, like you say.
I'm considering it, and I think an easy equities account is overdue. I'm embarrassed to say that I haven't had one so far, but I think from what we've learned today, it definitely is one of those platforms that really does provide an opportunity for people who've had the historical anxieties and felt the process was a bit alienating to then say, well, let me engage with a much wider community. So I think that's been one of the big upsides for me this morning.
Well, there you go. Carl has just converted one, if not our co-host. Right, so that concludes the show for today. Please stay tuned and join the next investment forum, which will be on the 4th of September this year. Thank you to all our speakers today. Great presentations, thought-provoking questions, and we really hope that you enjoyed the show. Thank you very much.